If we look at the volatility side of things, realized vols. So realized vol obviously broke below 30. We haven't seen that in a long time. You can see from the volatility cone down here, the green line is the current vol, and pretty much from a 7-day all the way to 180-day, it's sitting on the lows. So that's looking at over the last year of history. Literally every time frame of realized from 7 days and out is at the lows of the year. Okay, and moving less than 30 vol means it's been moving less than S&P, which is very rare. Ethereum hasn't been a lot better. That's been realizing around 40 vols, and implied vols have struggled to keep pace with this collapse, this recent collapse in realized. So you can see realized vol heading down here, implied vol just kind of hanging around there basically. Now, in the last little breakout that we had today, we've got Bitcoin up 3 or 4%, and we've got Ethereum up 8%. So we are going to see these realized numbers bounce a little bit in tomorrow's numbers that include today's move. So that spread kind of converging or collapsing back down via the realized popping. But still, before today's move, we're seeing very healthy carry numbers in the over 20 vol range, which was looking pretty good for the gamma sellers. Okay. With FOMC, US midterms coming up next week, October expiry rolling off on Friday. I wrote this in the morning, some kind of break is imminent. I didn't think it would happen today, to be fair. I thought it would happen after expiry. I still don't think it's going to necessarily accelerate into expiry. So we'll see how expiry plays out. But yeah, given that we've got FOMC next week, I mean, there is some more room for this thing to move next week. Okay, so that's what we're seeing in realized vol. If we then have a look at what the term structure has been doing, you can see no big surprise that we've got contango in the two big majors. That's these curves very upward sloping here. Not a big change on the week, but generally when realized vol is low, that's what you get. You get the front end collapsing and you get the back end kind of holding up, not doing a whole lot. Okay. And you know, all that, so implied vol struggling to go any lower due to an expectation that markets will move again in the near future. Okay. The spread we can see here is around 10 vols. If we go 1 month out, so that's the ETH versus Bitcoin vol spread. Obviously, you know what we've been doing in that. We don't really have a position in it anymore. We ran it short from pre-merge. That worked pretty well. It's back to levels that are more normal now. I've got nothing really to do here. You can see the 6-month history. This kind of shows the chart. I mean, it did get as low as 5 vols and even 0 back earlier in the year, but I'm not thinking it's going to go there anytime soon. If you look at the most recent price action, it's kind of stabilizing at around 10, that spread. Okay. Realized vol, similar, is about 7 or 8 on the 10-day, and it's about 13, 14 on the 30-day. So it's kind of 10 is bang in the middle of that. So it's pretty fairly priced in my opinion. Okay, so not a lot to do. If we did go sub 10, that would make Ethereum probably the preferred Vega to own due to the more explosive upside when things move again. And we've already seen that today with Ethereum up 8% on the day, showing its hand, showing that it is a more high beta asset. And when it wants to move, it can move. Looking at the dashboards for the two, what do we see? Generally, we're in the buy vol. Obviously, no surprise because vol is at the lows of the year, but the carry indicator is saying that you don't want to touch it with a barge pole because it doesn't carry itself. So we need to be careful about blindly following the strategy compass, and we need to make sure when it's saying buy straddles and strangles, we check the carry indicator, and when we see a massive positive in the 96th percentile, we sit on our hands and we wait for confirmation that it's time to buy volatility. So for me, I don't think now is necessarily the right time to buy vol. Yes, we've had a little breakout in terms of spot during the day, but I want to see more confirmation that this vol is really worth owning, and I think we need a little bit more time to really see that happen. Okay, on the week, obviously we had spot pretty unchanged, vol fairly stable, and skew still 7.5 vols for the puts, which arguably is pretty rich still, and now that this market has popped, that's probably going to be flattening. So I'd be looking for skew to come down in a rally in the market, and I'd then be using that opportunity to pick up some hedges. So we look at Ethereum, similar sort of story here. Skew a bit cheaper, around 6 vols in the 1 month. This is suggesting that you buy puts rather than just buying straddles, because it's saying that Ethereum has bounced enough. Personally, looking at the chart, I disagree. I think the upside in Ethereum, as you can see, could be a lot higher, could go as far as 1,600, even 1,800 in a bear market rally risk asset squeeze that we may well see. So I'd stay out of the way right now. I wouldn't be selling calls. But then once we think that target has been reached and we think risk assets are ready to roll over again, then I'd be piling into some risk reversals, because that skew is going to look relatively attractive, right? That's kind of how I'm playing it on Ethereum and thinking about it. All right. If we look at the crypto option flows, we've seen these are the flows over the last sort of week. Generally, apart from theta management and DOV flows that kind of hit that weekly expiry every single week, we did see a few buyers popping their heads up, being brave, basically. So 4th of November, which is obviously captures the FOMC next week, we saw some 18K put buying. We also saw in November at the money straddle get bought. That's probably looking quite decent at the moment with the pop in spot. And we also saw some longer dated Vega, which is the 29th of September next year. The 22K calls, they were bought, but they were delta hedged. So that was not a naked purchase to be bullish. That was just buying some vol in the back end of the curve, which you think's oversold, that's going to hold its value, that's not going to decay that much, and you're going to delta hedge it. So it's the Vega trade that you're playing there, basically. All right, so that's what we saw on Bitcoin. On Ethereum, similar story in terms of 4th of November. We saw some put buying here. We also saw some selling of puts in October to help finance it. So just keeping the carry down for this week, but owning volatility for next week, expecting that to be the catalyst. Although if you had done that, you'd be getting stung with the 8% move right now, because we've just popped. In terms of what else we saw, we did see a 28th of October 1,400 call buyer. That guy's gone in the money, so that's been a relatively good trade, whoever bought that. And we saw the November call spreads getting sold, 1,400, 1,600, whether that's a vol trade with protection or whether that's just exiting along, who knows? But that's the kind of flow that we've been seeing. Okay, so those are the option flows we've been seeing. In general, people kind of happy to kind of sell the front end because the market hasn't been realizing, and really wanting to buy vol in the longer term bucket. So anything in 2023 is a bit more of an own, and we see smart money kind of pushing their premium out further, because vol is mean reverting, but you need to make sure you're parked in the stuff so that doesn't bleed too badly in terms of theta risk, and so that when the vol does finally recover, you're going to have a Vega position to benefit from that. Okay, so that's the crypto option flows that we saw this week. But that's it from me. Thanks for listening. Good luck with this breakout. Personally, I'm not chasing it. You guys can do what you like. But I think it's one of those things. It may well have another week or two to go, but these things are volatile. And the way the market's been trading this year, I feel like a lot of people are on the bandwagon for this short squeeze right now, which means generally when that tends to happen, it means it can be pretty short-lived, right? So be careful. Maybe using some sort of spread trades that don't have too much vol or too much carry on them to participate in the upside. If you really, really want to go for it, that could make sense. But outside of that, I'm not touching it right now. Thanks for listening. I'll catch you guys later.